This is weekly commentary number 9. So what we saw this week, in fact, let me just remove these for a sec. Let's go straight to the weekly, yeah? Let's go to the weekly DXY. Now, forget this week's trading happened, Joe. Actually, can we use the yeah, let's just do a replay. Uh, alright. I just wanted to use the replay because it takes away that week's trading. What do we have here, right? Remember this was the run on sell side liquidity and we came back up. So the next week our biases were we had an institutional order flow entry drill where we swept liquidity and we further filled in that imbalance. We overshot it just by a few pips, that's fine. And then we quickly came back up. So the next candle after all of that, after sweeping liquidity and rebalancing the imbalance completely, what is the next candle likely to do? Go upwards, right? What is resting above these highs? Above this high here, above this high here. This is what price, we don't just expect price just to trade into that here. It's seeking liquidity. Remember, everything, the backbone of this market is rebalancing imbalance and delivering liquidity. Nothing else. The market doesn't book on anything else. It then uses time and price to deliver that, but the core function of the market is to rebalance imbalance and to deliver liquidity, or I say the core function of the algorithm within the market. So this candle, where does it trade to? We're dangerously close to this high above here and this high. Using this narrative now that we're close to an high, we are likely then to trade into the high. Does it make sense to then just go downwards from here? It does not make sense to do that, guys. Yeah. Remember, look at the weekly candle. Look at the price action on the weekly and think to yourself, what's institutional order flow? Well, look at institutional order flow. We're just rebalancing the bullish imbalances and we're moving up. We're respecting lows. We're respecting bullish price arrays. Yeah. Now, remember in chapter 1 how I told you guys your bias is bearish or bullish depending on if we're respecting highs and lows. Well, I didn't introduce you to the price arrays at that moment. Having now introduced you to the price arrays, I want you to add on to that, right, in your notes. And you want to add on is price respecting bullish or bearish price arrays. Are we, and by the way, highs and lows are within the price arrays, old highs and old lows, right? But are we disrespecting bearish order blocks and respecting bullish order blocks? Are we bouncing off of, you know, bearish imbalances, which is called BISI, buy side imbalance, sell side inefficiency? What are we respecting? The bullish or the bearish price arrays. This is how you dictate your bias even better, right? Because in saying are we respecting old highs and old lows, we will always have in the bullish environment, we will always take out short-term lows, right? Like for example here, there was this low where my cursor is right now. There was this liquidity, this imbalance I mean here. So it makes sense that we break this short-term low into this imbalance, which we did here, and then we go off because we're still respecting bullish price array, although we swept that short-term low. Yeah. So with this new knowledge now of respecting the bullish or the bearish price arrays, this should help further, aid in helping dictate your bias. So back to what we're talking about. What was the likelihood of the next candle trading up into above this buy side liquidity pool on this one? It's more likely than price going downwards. If price was to retrace early in the week, we expect it to rebalance the imbalance left between the close and this candle's wick. So let's see what happened that week. It's just going to be one candle, right? Early in the week, what happened? We filled in a portion of that candle's imbalance. Trade above that week's high. We're now even closer to this buy side liquidity pool. we trade above it, and we're close to this one. Now, say said in the Telegram group chat on the Euro GBP pair, right? And it's the same, we can apply the same thing what he said here. He said this week was bullish, so does that mean next week was bearish? No. Your bias doesn't just change depending on what the previous week was. That's irrational. That's an irrational approach to the market. We are bullish until there is no reason to be bullish. Do we still have buy side targets? Yes, we have these highs here. We can trade within this rejection block here, right? We want to trade within at least here, right? 102. Going into next week, we can further expect what? We can expect this is now your bearish breaker, your bullish breaker, this candle. So we can still expect retracements up into this candle. We can further go and rebalance this whole entire imbalance. These are just possible retracements that can happen. However, where is our ultimate target? Because retracements aren't our ultimate target. Retracements is where we're sitting on our hands until we want to get back in with the continuation of the big move upside, unless the bias changes, which is if we start breaking these lows and disrespecting bullish price arrays and respecting bearish price arrays, right? There's this liquidity pool to trade to, this rejection block, ultimately, these old highs, which are equal in the highs basically. From this helps you dictate your bias for the week. Remember, early in the week, is if on a bullish week there is usually a retracement down. Because you always need to have some sort of Judas. It can be a run and stops, that type of thing, right? Then after that retracement happens in the week, early in the week, right? You want to see the move higher. Aim for this liquidity pool first and see the willingness to trade above this high. If I go to Forex Factory, I think this week there is uh, Monday, Tuesday. I think it's on Thursday. Yeah, Thursday. Powell is going to speak. This is going to be a significant news event, right? This is significant for the Euro USD, and I think that's it for yeah, that's it. Your eyes should be on this one for the week. You don't want to trade before when the news event is coming, like the day before the day of the news event, hours before it, the session before it. You don't want to trade it. You do not want to stand in the way of this guy speaking here. This guy here, yeah, the Fed chairman, Powell, how we pronounce his name. You don't want to stand in front of the way when he speaks, because the market will be in a tight range and it will be a very large significant move one way usually, and that move is hard to be able to be a participant in that move, because usually it's just a few candles just going straight in one direction. It doesn't really offer a retracement to get in with the move, so it's better to not trade those moves, right? Let's go to the euro. So same thing in the euro. What do we see? The same thing. We rebalance this imbalance and we're moving down lower. We hit that weekly objective, and what's next on the weekly objectives is the same thing. There's this low rejection block. We want to at least trade into the wicks of it, right? And if we do break that, you just look for the next logical sell side target, which is these lows, ultimately this liquidity pool, which many rejections are here. If we break that and we go lower, those are new lows for the euro, the lowest prices ever in euro. So we could actually be witnessing history as well, which is actually quite crazy. Going to the hourly chart, let's start dissecting how the week's traded out. So how did the week trade out? The high of the week was made in Monday. I wanted to see the run above these equal highs. You see these equal highs right here? These ones. I wanted to see the run above these highs and fill in this imbalance more before like a bigger move down. It didn't do that, and we just broke lower straight away. When we broke lower, this high to this low and break lower, when you see a market structure shift happen, right? I want to show you guys something. You're thinking, what the hell is this? What's the level 2, 3? What is this? All right, a bit of algorithmic theory, let's say. What do algorithms work off? It just crunches numbers. And we had a conversation about this in the Telegram chat, right? And if it's algorithmic, everything should be, this looks all crazy. This looks like, how can anyone expect and know that it's going to trade down here? How? I want you to see how the level 2 lines up with the bodies of the candle. I don't care about the wicks. Look at how level 2 lines up with the candles. There's no, and this isn't cherry picked. I'm gonna show you another more examples. I promise you, I'm gonna show you more examples. What do we have here? The breaker block. When we see this high, this low, this high, and then it's a failure swing and it's lower. I always use this with my fib. This is called a measured move. Now, going off the fact that it's an algorithm that runs this market, every single move, large significant move to one side after running a stop or after leaving some sort of range or consolidation, it will be a measured move. The algorithm doesn't just, move a certain amount of pips because it feels like it. No, algorithms, AI, right, code, it moves in what? A perfectly ordered manner. It trades in a perfectly ordered manner. There's no randomness. There is no randomness in this marketplace. So how would you code in, or how would you code in the market, computate a code within the market for the price to move perfectly? You'll use deviations of certain price ranges, correct? And I can talk about this. This can be such a long video, right? But I'm just gonna give you an introduction to the algorithmic viewpoint. If the market, right? If the market moved, there's always an average daily range. The average daily range, a market like the Euro USD, for example, you'll see like each trading day from the high to the low, it moves a similar amount of pips every single day. This is a very large trading day. But you see like Monday, Tuesday, and Wednesday, similar pips, right? It travels in like an average daily range. If every single time the market moved exactly 70 pips, or after leaving a consolidation, it moves exactly 30 pips away from a consolidation, over time, retail traders, right, they'll start to realize that, oh, whenever we leave a consolidation or whenever a certain pattern happens, it moves exactly 30 amount of pips. So what I'm going to do is I'm going to put my stop loss at 35 pips so that I can never get stopped out because it only moves 30 pips. It will be too easy for retail. So how would you make a market where moves have to be exactly calculated, but the average retail person will never clock on? And I don't say this as retail are idiots, right? But the fact is, there is a sucker or there's an idiot born every day. And when I mean born, I don't mean physically born. I mean born as a metaphor, like introduced into trading, born into this trading industry. So how would you catch those people offside and make it look like this is all randomness? You will have to use a range, and off that range, you'll use deviations of that range. Now, this might, if you don't understand maths and coding, this is going to be like, what is this guy talking about? Some bullshit. Um, the easiest way I can break this down to you is our consolidations, every consolidation in the market, or every single low to high that forms. So like low to sweep the high and then failure to swing. Because remember, look at this one, yeah? Because I'm gonna show you this one as well. This is another one. When there's a low, high, higher high, and then a failure swing, is this one, yeah, the same as this one in pips? No, it's not. They're always different in the amount of pips, and this is what I'm getting at. If the amount of pips is different, the deviations will be different. For example, if a consolidation, right, is 16 pips and there's another consolidation with 27 pips, well, the deviations of those ranges will be different. But in the language of code, you can code them to move exactly 3 deviations of their range on an expansion, and that is actually the exact same price action in terms of code. But visually, the amount of pips they move are different because the range of the consolidation is different in the pips that they have. But the move, if you calculate as a deviation from the range, is the same expansion. Rewind that and listen to that a few times and write it down if it doesn't make sense to you. Because I'm gonna show you examples. 08161. The close of this candle is 08116. Wait, the close of this candle? Eighth, no, it's 08158. So we're just, 3 pipettes off. 3 pipettes, which is a third, 30% of a pip, which is, pretty much accurate. This is something that I like to use whenever we see this when we see this form, yeah, you want to know where it's likely to trade to. Now, I always say at least a 2 standard deviation. You can see the third one magically lines up with this as well. Now, this is not random price action. This is, by all means, this is not random because it's the start of the week. Assume that this is truly a bearish week. This is a good way that you can get your low of the week. You have to see what does the standard deviations line up to, right? Because it can't just move standard deviation. And by the way, the midpoint of the deviations as well are things that we want to consider, right? So you got your 1.5, you got your 2. I just don't put all of them on because it's headache to put all of them on. If you go to the daily, that third where is it? If we go to the weekly, my bad. Standard deviation 2 is what we want to see. Is at least a standard deviation of 2. Now, on the weekly, standard deviation 3, 4, 5, 6 is a stretch. 6 is you were trading below this. 5 doesn't make sense. It's too much to move in, but it's too much to move in like one move, right? But let's look at 2 and 3. Let's look in between 2 and 3. On the left, what can we see between 2 and 3? We can see all of this, yeah? All of these targets. You can see the low of this candle, the low of this candle, the low of this candle, the low of this candle. Given the time aspect, price can't move at 500 pips in one move, right? So let's have a logical background, logical approach to this. Given that this is our deviation of that price swing, where is price likely to trade between the deviations? We want to see at least 2 happen. Is 3 possible? Yeah, 3 is possible. Look at this sell side liquidity. We want to run through this. So you could have the 2.5 and there's 3. 4 is a stretch. 5 is definitely a stretch. 6 is an ultimate stretch. So you want to see between 2 and 3 get traded to you within that price swing. 3, 0, 7, 5, 7, 5, 0, 7. Look at here. Look here at the low. 0, 7, 5, 7, 5. I wanted to show you guys this year as the end of the mentorship, but I want you guys to see that there is no way that this market does not move off anything other than an algorithm. There is no way. How can me, a boy, 20 years old, 20 years of age, right? And I'm by no means a genius. I'm by no means anything. I'm nothing. I swear to God. How can someone calculate this or calculate this, right? And okay, let's get rid of this. Let's say that one's lucky. Let's say this one is lucky. All right, cool. It's the same thing. When you have this as well, same pattern, yeah? The low, this is the lows are also in this wick. This low to this high, and then we move lower. We want to see at least two get traded to. Two is here, right? 1.5. What does 1.5 line up with to the left? 1.5 lines up with this low. Is it above or below the 1.5? Is above the 1.5. So this is a target within these two standard deviations. Considering our weekly target of the low, our weekly target of the low is was I think it was between here. If we do the same thing again, because we see it here, these targets are yet achieved. Now, let's go back to the daily. And what did these targets line up with? Let's go to the 4 hour. It's too much here. I want you to focus on the numbers within the brackets, yeah? This is 9 pips off the 80 pip level. This is something I'm going to teach you guys as well. The 20, the 50, and the 80, I think I've touched on it on a previous weekly commentary. The 20, the mid figure 50, the 80, and the whole number, which is the 00, they are significant numbers you want to consider, right? The third deviation lines up with close to the 80, yeah? If we go on the weekly, let's see what it lines up with on the weekly on the left-hand side. It lands up with a run on this low, right? Here. You see this low? You see how the third deviation lands up with here? That's These are how I try to frame my type of trades, right? From this range trading, what's the expansion after this going to do algorithmically? Because it has to be, a calculated move, right? We have our deviations for the calculated move. We want to see where is it likely to trade to within these deviations. This is how I view price action a lot of the time, right? Get rid of that. Of course, within that, we have the OTE from here to here, right? We have this imbalance within the middle, right? If you OTE from here to here, I'm guessing this area around here is the OTE. Go on a 15-minute. You got your mitigation block here that's untested. Bring that out in time. That's a possible trade entry there. And you have all of this. You have liquidity built up amongst these highs. You got liquidity pool here. So what's likely to happen? A run on the buy side into our price array above market price, break down lower. Things like that. You have to start framing your narrative. You frame your narrative, write it down, read it to yourself. Does it make sense? Is this logical? If it's logical to you, stick with it. There is a reason to go against it, stick with it. Let's see how price unfolded now within the week. So Monday was a run above the high. We didn't quite get here, and then what happened? You break lower, right? This was 8:30. This is 8:30, right? This move here will happen at 8:30. This was I think it was CPI for the USD came out. Ultimately, it's just a run on stops. If you go high to low, you see how it goes above the 50 into, I'm guessing it's like a 62 OTE, comes down. And you might be saying, but what about this high, this low? Look at the significant high to low, like the ones that are just clear to you, right? If this, like this one, you lose in trade, right? This high to this low, you'll keep anchoring. It will be this low first, and then we move down, and then it'll be this low, and then it moves down this low, and then moves down, and then this low. Obviously the OTE, right? Now, going into Wednesday, this is the day I want to do. What? Let's look at Forex Factory and let's see what's on the Thursday. This is next week. You see here the main refinancing rate. This is the one we care about, the monetary policy statement. Anything that is monetary policy, it is crazy within the marketplace because monetary policy, interest rates, interest rates, driving force of the forex market. Just that chain of analysis, right? Look at what happens after London, after New York. So after 9 o'clock, right? 10 o'clock, what happens? By the end of it, look, 11 o'clock, we start to just move higher, move higher, move higher. We're moving higher the entire day. Even at times, it doesn't make sense. Look, at 9 o'clock US time, which is 1 a.m. our time, we're moving higher in the market. What are we doing before this news event? Before this news event, right? At 7:45. What are we doing before this news event? We're running out the buyers. We're running out buyers here. Yeah. The previous day, we're running out the highs. The highs, the buyers. The news event comes out, and then what happens? When we come here, smash down. Comes up, this, you see the breaker block. It doesn't always have to be like this, for example. High, low, like this, yeah. If you zoom out, you can see fractal prices of the breaker. So look at this here. Low, higher high, and then we break down lower to the lower low. You see what I'm saying? Low, higher high, lower low. Because this is a low, this is a high, and this is a low here. Into the 50% of this breaker, and then a move down, right? The What I showed you with the fib, you can use it as well for any time frame. So I like to use it on breakers, right? I love to use it on breakers, and this is something unique to me. I promise you, you will never see anyone, a hand on my, if you can show me one person that uses breakers with standard deviation, I don't think there's anyone out there other than me. I'm not saying that, oh, I'm something amazing, right? Because I followed the breadcrumbs of my mentor and I found this, right? But there's no one else that shows this, right? So when you see this breaker, because this is a breaker block, right? High, I mean low, higher high, lower low. When I see that, because it's a failure swing, right? It's just a high and then break down low, aka market structure shift. I want to see, well, where is the market going to? Because that's what we need to know. We need to know where is the market likely to trade to with this shift in its price action. Okay, so let me look at let me get the market structure shift from the breaker. This low to this high, and then I see my deviations, yeah, from this price range because this is the false move higher. So the algorithm using the false move higher, we can project where it's going to use this calculated move to end the move. You see how it's disgustingly close to here? Show me any retail method that does this. Show me one retail method that can get you close to this. Any indicator, any RSI, any MACD, anything. There's nothing that comes close to anything like that, ever, right? This low to this high comes down, overshoots a tiny bit. So that's what, 609. The low here is 575, yeah. And then move higher, but there's nothing really else much for me to say in this weekly commentary. I'm making the syllabus, not syllabus, but I'm just having some, like a mind map in the psychological series I want to start for you guys, the whole regrets thing, because I'm thinking of, I was thinking of a way to do it, maybe a chronological thing, like I can do my regrets in chronological order of how my journey went, or I could just touch on main components of what I think is important with reference to the regrets that I had when I was a new trader. In terms of in terms of this weekly commentary, I want you guys to do this. Have your time to UTC minus 4 time New York like this. Midnight for the whole week, yeah. Do how I do it. Midnight. Midnight, midnight, midnight. Friday is different because the market closes at 5. So go 5. So start from the right, yeah. Friday, 5, midnight, that's Friday. Midnight Thursday, midnight Wednesday, midnight Tuesday, midnight Monday. In the last weekly commentary, I used the kill zones, right? So from 2 a.m. So let's just do it from here. 2 a.m. to 5 and 7 to 10. You see how London starts to run higher. It sweeps this, right? In London, we sweep this low and we run higher within the London lunch. And you see in New York, right? You see how there's this move higher, move lower, sorry, after London. Because London was the Judas, right? Yeah. Simple. You could OTE from here to here, offer the OTE into this mitigation block. I mean this order block, sorry, and then move lower. Start to frame or back test like this. If you're going to back test anything, this is a answer to I think it says in the mentorship about back testing. This is how you should back test. Back test how price and time and price unfolds. Because you see how people backtest a model. Let me tell you the honest truth. When you backtest a model, your specific model, you will do everything to cherry pick your model. You'll say, yeah, I wouldn't have taken this one, or this one, I would have taken it like this, or I would change this here. Forward test your models on a demo account, please. Forward test them in real time. It's very easy to be a cherry picker. Natural human instinct is we love to fluff and sugarcoat things that we like or things that we want to work for us. Like delusion. It's a real thing. When you really like something and it's truly bullshit, but you just have some emotional attachment to it, you will be like, but this, but that, but this is good, but this is good about it. It's the same thing with your model. Your model will be dear to you, even if your model is trash. Until you actually come to sense and say, yeah, this is trash, you'll be deluded within your model. This is the truth. What you want to backtest is how does time and price unfold day to day, right? Have the time. Before any of this, you need to know your higher time frame bias before you do any of this. That's why when I do the weekly commentary, I start with the weekly because the DXY was poised to go higher based on that weekly. Remember on the replay button, it was likely to that we're going to reach into those highs. So the DXY, the Euro USD was about to do what? Reach into the lows, correct? So you have your narrative, so you expect bearish price action. So every single time in London or before London, what are you waiting for every single time? You're waiting for the big move. Here, oh, there's no big move. What's happening? It's consolidation. Yeah. What's it consolidating for? Tuesday, CPI, 8:30. This is, look, 8:30, yeah? 8:30, Tuesday. 12th of April, 8:30. Tuesday, 12th of April, 8:30. You have to frame, this is how, the news events, by the way, is so important. It's a free lesson, but yet it's so important. Because this, you don't want to trade this. This is just choppiness to get everyone offside for the news event. Buy is crushed here, equal high is crushed here, and then the move lower, right? Start to frame your back testing or your charts like this. When a day happens, delineate it, right? With the midnight thingy, vertical line. have your London kill zone and your New York kill zone. We're gonna add more stuff to it now. For example, the Asian range and potential London closed kill zones. But for now, this is all you need. You don't even need more than this, right? London, again, like here, you'll start at 2, 2 to 5, 7 to 10. You see how on the close of the New York kill zone, this was the move higher, right? And this is why you don't trade Fridays, especially, and I've said this in the Discord before, when Thursday is a large trading day like this. Look at this compared to the other days, right? Look at the daily range for this compared to the other daily range. When the daily range of Thursday is so significant compared to the other days, you don't touch the Friday. You do not touch it because Friday will always is Friday a lot of the time is just going to trade back within the weekly range. So you see how the weekly range is from this high to this low, right? Thursday capped it. Friday is likely to just come back and trade within the range. It's not gonna offer any expansion downwards because what we're doing is we want to know where that weekly candle is gonna trade upwards or downwards, and you see the expansion. The expansion means from the high to the low. You know, like expanding. Like if you get like right now, I got my hands like I got my left palm on top of the fingers of my right hand and just expand. Like, you know what I'm saying? Like, if you lift your left hand up and your right hand down, you know how that's how the body of the candle expands, right? You're trading that expansion of the candle. Friday doesn't usually add any expansion unless it's an NFP day or there's a significant Friday news event. Then it will likely add to the expansion. But once the expansion of the range is done, you don't want to trade it because the expansion, the time to trade in that week is done. The expansion of the range is done. What else are you going to trade? From the wicks to the body? It's not favorable. It's, you know, low quality setups. That's what some people like to call it. I like to say this is unfavorable. You want to try to get in with some sort of expansion of the weekly candle. But that's enough for this week. And just seeing it, this untested zone of imbalance, right? This imbalance, ultimately, this order block was tested to on here. This is something that you want to see because whenever you see this candle get left behind and there's imbalance, and by the way, for this to be a real order block here, you need to have paired it with some sort of imbalance for it to trade back into. If this was just wiki and there's really no imbalance offered here, you don't want to treat these as order blocks. You want to see imbalance and then consider these as your order blocks. Just a tip, right? You see how it comes to the imbalance, ultimately trades up into the order block and it trades back lower. Things like that are very key. Don't think, oh, we've moved and this isn't trading back into this range. Oh, this is never going to get traded into again. Remember, it's algorithmic. It remembers that imbalance, right? Remember, it's algorithm. It's not people running these things. It's an algorithm running the price delivery. It definitely remembers this. This price array from Monday definitely remembers it. 100%. It will come back there. Trades, then it breaks off trading lower, right? Now, this video, I was not in a rude way, but iffy to show you those standard deviations with the breaker because I promise you guys that's something that I found myself through a lot of backtesting, through other methods that are similar to this. Really, truly, that's mine. No one else has that. If you can show me someone else that has it, I'll be you know I'll be interested actually, quite surprised. I prefer if you don't publicize it because that took me a long time actually to find that. Use it for yourselves by all means. If you're gonna want to use it before you post a chart on social media, if you could just, delete the fib, that's fine. I hope that helps you guys because it's backtest it, right? Backtest it with the breakers. With your breakers in line with the bias, when you want to see where the big moves end, back test it and see where it goes. Your mind will be blown, and you'll accept the fact that this is completely algorithmic and there's nothing else running this market. But enough waffling. I'm gonna try set that series up ASAP. It's quite a busy time for me, and Ramadan is, halfway through, especially the last 10 days is, they're very meaningful to Muslims. So my activity might go down. That doesn't mean that the schedule for these uploads are gonna go down, but that's it for this week, week 9. Next week will be week 10, which is quite crazy. It's been nearly 2.5 months of the mentorship. Quite a lot of progression actually. But until next time, guys, take care of yourselves.